Today is Tuesday, May 3rd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Starting with the grains this morning, Steve, soybeans, soy oil, and wheat futures have traded lower. Why? And are these markets a buy right now?
I think last week we tested some pretty critical high levels, and it suggested the market might have been a little overbought. But then we started seeing things about inflation. We started seeing concerns about China demand as they have COVID lockdowns, and also just things about maybe lower demand with Indonesia talking about reversing their decision on banning palm oil exports. Soybean oil was down about 8 cents a pound, soybeans down about 69 cents. The interesting thing was that corn kind of held its ground above the $8 level with a lot of weather problems. I think that the key right now is weather, and I think that if in 2 weeks we get the corn crop planted, corn market might set back, but that is a buy. I think that the soybean market at current levels is also a buy, especially if China comes back from their Golden Week holiday and starts buying U.S. soybeans. Definitely soybean oil is a buy with this kind of break, given the talk of higher biofuel demand. And the wheat market continues to be a weather market. And recently we saw some rains in the southern plains, but the USDA continues to show the winter wheat crop down, and that if we get into a pattern change of warmer and drier conditions, Kansas City wheat prices should also make new highs.
Speaking about the USDA, on May 12th, Steve, we'll see the 2022-23 supply and demand report. What is the market expecting?
Well, so far this year, USDA has kind of kept numbers close to what they have been saying, and that the Outlook conference showed a much bigger corn crop and carryout, bigger bean crop and carryout, a bigger wheat crop and a carryout than what the private analysts are using. So if they continue to decide to wait to see what our export demand in corn and beans this year, give us another month to see what kind of weather we have in the U.S., you could see kind of a neutral report and somewhat of a negative response to it because people are trading much lower numbers. But I think once we get into the June numbers, that's when they really have to decide about Ukraine corn exports, how much our demand for corn and beans go up, and what our crops are going to be like in 2022.
Steve, just one more question. Can you give us an update on U.S. planting progress and the current U.S. weather forecast?
Right now, we're way behind. Got 8% of the soybeans, 14% of the corn crop planted. There's only like 7 or 8% of the corn crop planted in key states of Illinois and Iowa. Last year, they were half done by now. Any corn that's planted after May 10th sees a slight decline in yield on a daily basis, and pre-vet plant kicks in where farmers could take that option rather than planting on May 20th. The wheat, spring wheat's only 19% planted, and it's going to be another 2 weeks of heavy rains up there. Eastern Canada is cold and rainy, while Western Canada is dry. So I think that these late plantings is a big deal and could lower our production numbers. This, when he couldn't get planted, by the time he got in the fields to plant, the rains shut off. And so this is something that we're going to have to keep trading over the next couple of weeks. The weather forecast, rains in the north, another week of rains in the Midwest, and then we should start seeing a little bit of drier trend as the market makes a La Nina transition to more ridging, more dryness, and warmer temps.
Thank you. Alan, looking at the financials, what can we expect from the FOMC at the conclusion of its policy meeting on Wednesday?
So, okay, first of all, the statement will be released at 1 o'clock Central Time tomorrow, and then we'll have Fed Chair Powell holding a press conference at 1:30. So I think we can expect the committee will hike the Fed funds rate by 50 basis points and strongly hint at another 50 basis point increase at the June meeting, followed by subsequent increases of 25 basis points. Right now, there's a 99% probability that we will see the Fed raising by half a full point at the conclusion of the meeting tomorrow. Also, it does appear that the Fed will formally announce that they are reducing its $9 trillion balance sheet.
Alan, do you think there's a target rate that the Fed is looking at right now, even if it's out a year or two from now?
I don't think they have an actual rate, target rate, but my work does suggest that interest rates will probably top out in June of 2023. And I think after that, there will be some pressure on the Fed to ease off on the rate hikes, and maybe some pressure due to a slower global economy to start thinking about maybe some accommodation. But that will not be the situation or be, I think, of any consequence for the Fed to consider until mid next year.
Alan, on a spread basis, which of the major stock index futures will outperform the others in a higher interest rate environment?
So the more capital intensive companies, which would tend to be in the NASDAQ and the Russell, I think those will underperform the better capitalized companies that are in the S&P and Dow. So basically look for the S&P and NASDAQ, or the S&P and Dow to hold up better than the NASDAQ and the Russell. Probably the Russell likely to be the weakest performer of the group.
Finally, Alan, one final question here. What are the charts saying about the trend for these interest rate futures?
Well, first of all, the charts still are very negative across the board, across the yield curve, from the short end, the Fed funds futures and Eurodollar futures, all the way out to the 30-year Treasury bond futures. So some of these futures have double bottoms, which I think are probably attracting some sell stops. So the technicals remain bearish. And also the way futures are responding to bullish news, really not holding up well or even giving any bounce or showing any indication of a bottom. So anytime a market does not rally on bullish news, which was the case recently, that's an additional sign that lower prices are likely. So I think nothing has changed. Expect lower prices across the board for the interest rate futures markets, and any rallies, such as the one you're seeing today, should be used as selling opportunities.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.